So Morgan Stanley shares are nonetheless moving higher on today's news.
Very nice. They're up about 4% right now. Are investors pleased to see the financials finally getting their house in order? Let's ask about our Fox panel about it. Mike Norman from the Economic Contrarian Update, Nicole Ridgway from smartmoney.com, Wayne Rogers of Wayne Rogers and Company. Good to see you, Wayne, my friend. Haven't seen you for a while. And Peter Schiff, author of this book, which if you don't read, you're going to lose every penny you have. No, at any rate. But it's a good read, Peter. I don't mean to mock it. It's a great read. Thank you all for coming. Peter Schiff, since I mentioned your book, let me ask you about what's happening with Morgan Stanley. We got this bad news, and the stock is up almost 4% today. Why?
Well, that's how, buy the rumor, sell the fact. I mean, people are short, they cover. But, the company had huge losses. This is not the end of those losses. This is just the beginning. It's going to get worse. Meantime, they had to sell 10% of their company to the Chinese government. They have to promise them a 9% dividend yield going forward. Next year, it's going to be very tough to even make that payment. They're probably going to have to get more infusion from the Chinese just to make that dividend payment. They're going to lose more money next year, and so are the rest of the financials.
Wayne Rogers, great to have you on Fox Business here in this hour. We love it. It's so nice of you to join us. Tell us what you think about Morgan Stanley. Tracy Burns was just saying maybe more to come. Do you feel that way, or are you happy that all the bad news is out?
No, I don't think all the bad news is out, and I've been talking about this, for a couple of years. The banks and do not know how deep this goes, and that includes the investment bankers also. They don't know how deep this goes. No one really knows because a lot of this paper has been postponed. A lot of it is in different places. They don't know where it all is. They know that they're going to have to take a beating, and they don't know how big a beating, and they can't determine that yet. So I think it's going to go on for some time.
But, Nicole, it appears that maybe they're bottom feeding, but investors are going after Morgan Stanley right now, despite the bad news.
Yeah, despite the bad news, I mean, there might be a little bit of happiness that the bonuses aren't being paid, that they're sort of being these bonus martyrs, even though I do think
bonus martyrs, I love that phrase.
I do think it's sort of a PR ploy, though. You know, they're basically just trying to, make investors feel a little bit better.
By the way, do we know how much, before we shed too many crocodile tears, do we know how much the CEO is making of Morgan Stanley?
Well, you got to figure that if Lloyd Blankfein was getting about $70 million, then let's just say, since their performance at Morgan wasn't as good, even just cutting it to $40 million would be significant.
Yeah, there will be some presents under the Christmas tree at John Mack's house this
Mike
year.
Norman, why are we criticizing John Mack for doing this? Who cares if it's PR? If he didn't do this, people would be outraged.
And Liz, that's the beauty of America. It's the most transparent economy in the world. It is why the Chinese put the $5 billion. Morgan Stanley didn't go to them begging for the money. That's why Abu Dhabi comes in. We're the most open society. We do this as a matter of course. You don't know in China what these businesses are really worth. They say something, it might be worth completely different. Look, Morgan Stanley didn't have a loss in 10 years. As a guy myself who's been a trader for almost 30 years, that is an incredible feat, a very difficult feat to replicate. I think now this is a tough business, investment banking and trading. They're taking a loss. They're telling us what they think it is to the extent that they know right now. Perhaps more will come out, but that's the beauty of our system.
Peter Schiff, Mike Norman makes an unbelievably great point that we couldn't emphasize enough here. As much as you emphasize foreign markets have nowhere to... You compare China or Russia, which have exactly the opposite of the kind of transparency that we have, that we provide our investors. Yes, there were problems. Yes, there was stuff that we didn't see in the financials. But compare that to China or Russia.
Well, look, I don't think our markets are that transparent.
Oh, but compare it to China or Russia, Peter. It's like day and night. Come on.
Look, at the beginning of the year, these subprime mortgages were being valued above par. I mean, people didn't know what these things were. I think there's a lot of losses still hidden in the commercial banks and the investment banks. It's far from over. And if you look at foreign markets, I mean, you're talking about some of the emerging markets, but if you also look at some of the mature, developed markets around the world, over the last 8 years, people have achieved far greater returns by investing outside the United States.
But I'm talking, look, you can get great returns on some of the Chinese stocks right now, but who knows tomorrow if they're going to just snap and go down to zero.
Look,
Come on.
You do your homework. I mean, you look over the company's balance.
But you can only do your homework when you have homework to look at or research to look at. And by the way, we understand now, Peter, I think everybody understands that, nobody has this brilliant oracle to the degree that you do, but a lot of the brightest minds on Wall Street for a long time valued these securities based on historical performance, and there was no reason to think that couldn't hold up.
Oh, yes,
Did
there
we
was.
go into an
There
excess?
was plenty of reason
Hold
to
on,
think
Wayne
it.
Rogers, do you go forward buying Morgan Stanley yet?
No, I don't understand this whole thing about when you talk about transparency. Yes, it's transparent, but so what? That doesn't mean anything. I mean, the fact is we had overvalued assets, people made mistakes, and they're going to have to pay for them. It's as simple as that. And if Morgan Stanley bought a basket of bad paper, then they're going to have to suffer for it, as are all of the other people who did that. We have a re-evaluation of the assets. That's what's going on. Somebody has to take the hit. Might as well take it now.
But do you buy the stock right now, Wayne?
I don't buy the stock right now because I don't think the hit is out. I'm telling you, I know from personal experience that a lot of the banks still do not know where the bottom is. They're taking a piece of paper, for example, and they say, okay, we're going to extend this guy's mortgage out for X months or whatever it is. We'll take interest only. We'll do anything not to foreclose. They do not want to foreclose. And if this is a $50 million loan on some high-rise condominium in Miami, they don't want to foreclose on that because they don't want to own it.
Wayne, let me ask you something. You're a real estate guy. I know you're very savvy when it comes to real estate. Real property has value. It might not be the value they thought it was, but it's worth something, Wayne. There's a backing to that paper, and it's worth something. There is an inherent value there. I don't think you're going to say no to that.
But if Mike,
Mike, the question is, where is the bottom? Where is that value? I don't think that we haven't hit that value yet.
No, if the value is half the mortgage. You know, I just read an article today in the I think it was the Sacramento Bee talking about auction foreclosures up in Northern California, and they just auctioned off about 1,200 properties, and only 17 got bought, despite the fact that they were offering the properties for 40% and 50% less than the value of the mortgages, and nobody would take them.
That's got to be the last word on this segment. We're going to have a lot more to come with this panel. Well,
even some in the Clinton camp are now calling for tax cuts.
Of course, it depends what kind. Former Treasury Secretary under President Clinton and President of Harvard, former President of Harvard, that is. That's a whole nother story.
Yeah,
Larry
he was chased
Summers.
out, wasn't he?
Yeah, right. Larry Summers spoke at the Brookings Institution in Washington today. He says keeping taxes or some taxes low is key to keeping our economy afloat. Listen up.
It is reasonable to suggest that stimulus approaching $50 to $75 billion, roughly in the range of 0.5% of GNP, is likely to be appropriate. The largest part of this stimulus should come in the form of tax cuts distributed equally among all taxpayers and recipients of tax refunds.
Yeah. So if even Democrats like Summers are calling for some tax cuts, will Congress follow their lead?
Let's ask our Fox panel about it. Wayne Rogers, what do you think? I mean, Larry Summers is highly regarded by many people on both sides of the aisle. But do you think this will sway the Democrats in any way?
No, I don't think so. Larry Summers can talk about this. People are talking now about the fact that, for example, that Greenspan, by lowering interest rates back in the early 2000s, possibly was responsible for some of this stuff that's going on now. Possibly. Larry Summers saying to cut interest rates right now is not responsible. No, I don't agree with that at all. It's not a question of inflation. It's a question of somebody has to take the hit, and they've got to do it now, and we might as well get it behind us.
But, Mike, in addition to cutting taxes, he's also talking about putting in a lot of money to bail out homeowners.
Well, he's talking about a package of tax cuts and spending to increase the deficit as a fiscal stimulus. It's a brilliant move. If the Democrats, if Congress, let's put it this way, doesn't go along with it, I think they're silly. Look, it's pure Keynesian. It works. It got us out of the Depression in the 1930s. President Bush used it after 9/11 as a combination.
Explain the Keynesian
John
theory.
Maynard Keynes says that, the free economy is fine, but from time to time it could mess up, and in order to get it back on track again, you need a combination. You need the government to spend, to apply stimulus, what we economists call aggregate demand. Pick it up. That's what he's talking about here. And it works. We saw it in Japan. They pushed interest rates down to 0%. It did nothing. It wasn't until the Japanese started to spend that their economy turned around.
Or cut taxes.
Peter Schiff.
Well, it doesn't work. What Mike Norman is talking about is inflation. You know, the free market works by itself. It's the government that interferes with the free market that creates these booms and busts. Wayne said it. He said maybe Alan Greenspan was responsible. Of course, he was 100% responsible. And, you know, when these politicians talk about cutting taxes, if they don't talk about cutting spending, all they're doing is going to create more inflation. And so maybe we get a little bit of a bump in our take-home pay, but everything costs more. That's why prices are going up, because politicians are simply printing money.
But Nicole, even Charlie Rangel, the chairman of the House Ways and Means Committee, said we should perhaps think about cutting corporate taxes, cutting our corporate tax rate. Wouldn't that be a stimulus to the economy?
Definitely. I mean, you know, any kind of tax cut is a stimulus in some way, shape, or form. And, you know, both on the corporate spending front, because, you know, corporations spend a lot of money in the U.S. and we're very dependent on that corporate spending, especially the IT industry, for example.
It's not a stimulus if the government keeps spending money, because if they don't take it from us in taxes, they have to take it from us some other way. And they end up taking it with inflation.
Peter,
the Federal Reserve prints the money and spends it into circulation. And it debases the dollar, and it causes prices to go up, and we all pay for the cost of government. There's no free lunch.
Wait, can we get back to the tax cut issue and how Larry Summers might be influencing some Democrats at some point? Wayne, do you think that that could be a possibility? I know I asked you that before. We kind of got off on a tangent, but I'd love to know your thoughts on this.
No. I don't think he influences Democrats at all about tax cutting. They're individual members of the House and individual members of the Senate are controlled primarily by their own constituency, and that's what they're catering to. And they also have to cater to their own constituency within those bodies, namely that you vote for me on this, I'll vote for you on that. It's not going to influence the Democrats at all. It might influence the presidential candidates who want to cater to something like that. But Peter's absolutely right.
No,
You've got to cut spending. That's the problem.
Look, there's this conventional wisdom, which happens to be wrong, that we need to run surpluses or balanced books. 70% of the time in the history of the country, we have never done so. We've grown the biggest economy this world has ever seen. In the 1930s, we applied these principles, and it wasn't only the United States, it was the world. We had a global depression. And by the way, many countries pulled out of their depressions far earlier than the United States did. It was really wartime spending that got us out, because we kind of held back. We took this course of fiscal conservatism.
You got to read Murray Rothbard's book on the Great Depression to really understand. You constantly rewrite history.
This is not the 1930s.
100% wrong. You're the one that brought it up.
Go ahead, Wayne. Go ahead,
Read Rothbard's book, The Great Depression.
Wayne, go ahead.
Well, I'm just saying, I think, Mike, you couldn't be more wrong. This is not the 1930s. You're thinking something drastic here. You're rewriting history, like Peter says. This is crazy. It has nothing to do with it. There are forces. You didn't even have a Federal Reserve who could do what it does today. These are all nutty ideas here. Look, it's a simple thing. It's a reevaluation. Somebody has to take the hit. You have to take the hit. And cutting taxes raising tax or cutting taxes is not going to help it. You've got to cut spending. That's what you have to do.
Wayne, we're all going to, I understand the moral hazard argument. You don't want to bail people out. I know, Wayne, you're against that. So many other people are against that. But do you want to have that spill over into the broader economy and really take us down? I mean, that's a question we're wrestling with here. And by the way, Wayne, monetary policy cannot fix these kinds of problems. We had Japan for 7 years. They kept interest rates at zero.
Let me get Nicole in here. Didn't President Bush already cut taxes? I mean, and if we continue, and we did that because we were dealt some dramatically horrible blows, such as 9/11, the Enron debacle. So we dealt with it that way. Is that enough? Was that enough, and we should just stop there?
I mean, this is sort of a slippery slope. You can't go too far with these tax cuts. Obviously, the government does need some money. So, all of this, the idea of cutting taxes, yes, it would be a stimulus. It should be a short-term cut, though. It shouldn't be anything that goes on.
Peter's right on one thing, if I could say this. And here is the crux of the argument, Peter. I'm going to agree with you on this. If we want to have a sensible discussion as to whether or not deficit spending creates an inflation, a debilitating inflation. That is the argument. I don't think anyone here today, or from what I've read all along the course of this, is talking about that happening. They're simply going with this conventional wisdom, which happens to be wrong, that we have to have balanced budgets, which is silly.
David? Mike just said Peter was right on one thing. Do you think Peter will ever say, Mike is right on something?
On Christmas Eve, he will do so.
And anyway,
I suspect.
I'm a generous person. I give unconditionally. I don't ask for anything in return.
Right. And Wayne is rolling his eyes right now.
I'm getting nauseous. All right, Wayne, hold on a second. We're gonna have a chance to get back to everybody in just a moment.
Let's get a good...
Top executives at financial firms skip their bonuses. Are they doing the right thing, or maybe trying to avoid lawsuits?
And so what, right? I mean, either way, what do they say? That, you know, good intentions? Well, let's ask our Fox panel if they feel that way. Mike Norman of the Economic Contrarian Update, Wayne Rogers of Wayne Rogers and Company, Jim Pethokoukis from U.S. News and World Reports, and Peter Schiff, author of Crash Proof. Jimmy, we haven't seen you yet today. Let's take you first. Tell me what you think about this, and does it really matter why we're sitting here judging this guy for not taking his bonus, or does the message get sent in the proper way that he's not taking all that money?
Well, I mean, if the message is supposed to go out to shareholders, don't sue us, we're not taking this money, I don't think that message is going to get through. I mean, here you have not just Bear Stearns, but these other banks having, the so-called smartest guys in the room having mispriced trillions of dollars in securities. Somebody somewhere is going to get sued, or this is the United States of America. On the other hand, by turning down these bonuses, it may lessen the heat a little bit for here in Washington, D.C., for Congress to do something about it. Congress in the past has been very hot about excessive CEO pay, and by forswearing some of this money, there may be less likelihood either this Congress or the next Congress doing something to limit executive compensation.
But Wayne, this really is putting incentives into the marketplace. I mean, Wall Street's famous for that, really using the incentive system to get more out of its people. That's what capitalism is all about, right?
Well, I think there's another thing here, too. It sends a message to their own employees. These are guys who are running these companies who are saying to their own employees, listen, I'm going to forego my bonus this year. I'm not going to penalize everybody else. I'm going to take the hit myself because I made a bad judgment, so I'm going to take the hit myself. So it's not just for the outside, for the shareholders or for somebody who's going to sue them. It's also for their internal purposes.
Peter Schiff, what do you think?
Well, I think the lawsuits are going to come regardless of these gestures, which is probably the least they can do. What these CEOs should be doing is giving back their bonuses for the last several years, because the profits they made last year and the year before that all sowed the seeds for the losses that they're about to experience, that they're experiencing now and they're going to experience over the next couple of years. So they really earn those bonuses under false pretense.
They get paid to take risks, whether it pays off, because sometimes it does, sometimes it doesn't.
They really weren't taking risks. They were throwing money away. They were making a lot of money in the short run, sacrificing the long-term profitabilities of their companies.
Well, and again, as Liz was saying, there is never any guarantee of success. Sometimes you lose.
Right, but they took their pay off the top. They took their money before
Peter,
their bets went bad.
You couldn't see, but I was actually throwing that to Mike Norman. But I appreciate the response. But Mike, go ahead.
Liz is absolutely right. Every business entails risk. These guys had it so right for decades. They were making so much money. Shareholders were making money. They guessed wrong. Look, what if I'm GE and I make too many jet engines and the demand in the marketplace is not there? Okay, then I have a loss in that unit or whatever. And there are many examples of this sort of thing. They got it wrong. The guy's not taking his bonus. I think Wayne's right, too. It sends a message to the employees that, look, he's going to take a big hit here. And no business is outside the scope of, maybe Peter can do it, but other people can't. We're only human. We're going to get it wrong once in a while. They got it wrong this time, but they've been making a lot of money for shareholders for a long time.
They had it wrong all along, the last few years.
Peter,
it's just like saying Enron was fine. Everything was doing great until it blew up.
Wayne?
Well, I agree in both of those cases. The hit is taken in the stock. In other words, if somebody is rewarded with stock and they've made a bad decision, the stock goes down. So they take the hit in the stock. I don't think the fact that they're giving up their bonus, they're not necessarily having to pay back their salary. That's not, I hope, Peter, what you're suggesting. They get a paid salary for doing a certain job. They guess wrong, they get hurt in the stock, and that's the way it should be.
Jim, I got to tell you, though,
right.
I was once working for the most free market guy in the world, the editor of the Wall Street Journal. He ate the free market for breakfast, lunch, and dinner, and he said that these salaries have become too disjointed, even on Wall Street, and that something had to be done, not by the federal government, but internally. Is this an attempt at least to acknowledge that there's a problem by the Wall Streeters?
I don't know if it's an attempt to acknowledge, that there's a problem. I think my earlier point about, making sure Congress doesn't get involved, I think that's part of it. And I think it's also what Wayne said, wanting to sort of set an example for the rest of the company, and also to free up money to keep some of these mid-level, very valuable managers with the company. They want to do that as well. Whether they make too much money, ultimately the market's going to decide, and the market's brought them all back to earth with these losses in stocks.
A lot of the bonuses that they made last year were based on the phony mark-to-market value of these securities. And if they had been honestly valuing them, they wouldn't have had these big bonuses last year.
That's a point too, Mike. But in the end, you do have to keep talent who sometimes do make mistakes.
Right.
Am I talking about myself?
You do risk. I think you do risk when you have a system where it's a pure meritocracy like this, where you really don't make much in terms of salary, and everything comes in a performance-based bonus. You risk, that there's an exaggeration that occurs at some point, that people try a little bit too hard, maybe cut corners here and there to make that big money. And I think that is where there's a flaw, perhaps, but it's still a great system. And you said it, it's what enables America to raise these trillions of dollars in capital year after year after year, not only for our country, but for countries all around the world.
You said it. I agreed with you. Thanks for the credit, but it was
gang,
yours.
very much.
All right, gang. A Fox Business alert, the U.S. has a new energy plan.
The president signed this bill into law this morning, and the legislation includes incentives for ethanol. Some people love that, some people hate it. Calls for the phasing out of traditional incandescent light bulbs and increases in mileage requirements for vehicles built over the next decade. Listen in.
The bill I signed today takes a significant step because it will require fuel producers to use at least 36 billion gallons of biofuel in 2022. This is nearly a five-fold increase over current levels. It will help us diversify our energy supplies and reduce our dependence on oil.
Well, U.S. automakers reacting to the new energy bill.
General Motors CEO Rick Wagner sounding positive, saying the government has, quote, set a tough national target that GM will strive to meet.
But will the government mileage mandates be the death knell for Detroit? Let's take that question to our panel. Well, you have GM, Wayne Rogers, saying that, we can live with this. So apparently it's not going to be the death knell for the auto industry, but is it going to be any good for them?
Yes, I think it's good in the long run. Look, they've got, sooner or later, this was a terrific first step. But because there were certain things that weren't passed in that bill. I mean, the control of public utilities and how they use energy, and the alternative uses of wind energy and sun energy, that were not in the bill. But this is a great first step. Detroit should have been doing it a long time ago. It's going to help them in the long run because they're going to have to produce a different kind of automobile, a new kind of automobile, and people are going to want to buy it.
That's right. And certainly, Mike Norman, anybody who has to spend close to $3 a gallon, if not more, on some East Coast and the Hawaiian state, and not to mention California. They're tired of spending all of this money week after week. What do you think of the bill? You were kind of making some noises.
No, I agree with Wayne. I think it's good. There are trade-offs here. We're going to substantially raise the mandates for ethanol, and that's going to factor into food prices, so we could have an offset there. No. It's not going to hurt Detroit. Look, you go back to the 1960s when we had, the Clean Water Act, and you could have said at that time, hey, it's going to hurt factories that were dumping their waste into rivers and streams. We had dead lakes up in the Great Lakes. We did it. Guess what? It created more efficient companies, more efficient businesses. Innovation was an outgrowth of that. Detroit is going to manage, and it'll be a very positive thing.
But, Jim, was that because cafe standards regulated by the government, or did Detroit change because consumers wanted a different kind of car?
Right. I mean, ultimately, these automakers are going to change. They're going to adapt to what consumers want and what consumers demand. The good part of this bill is it's going to force Detroit to push innovations and new technologies into the market much faster. I mean, they have a reputation for coming up with great ideas, but just over-testing them and over-consumer researching them. It takes forever to get to the market. On the bad side, you're probably going to end up with more expensive cars, maybe like $2,500 more. You're probably going to have cars with more glitches. They're going to be pushing these technologies quickly into the market, maybe they aren't going to thoroughly test them. So there's probably going to be more, glitches with the cars. So I mean, so there is a downside, but at least the government's setting a target and not telling Detroit how to meet that target. They're letting them innovate, letting them come up with the technologies necessary to meet these broad standards.
Peter, I don't know if anybody's talking about how bad things are anyway in Detroit. I mean, we're talking about, is this the death knell for Detroit? Detroit has had some real problems over the past decade.
They have a lot of problems right now. I mean, certainly they're on their back. I mean, the last thing they need is the government to be kicking them. But, they've loaned a lot of money to people to buy their cars. They're not going to get paid back. They have huge unfunded liabilities for pension and health insurance. They're having a lot of problems. But I think fundamentally, the federal government has no constitutional authority to be legislating fuel standards in the first place. These decisions should be left to the free market. If consumers want fuel-efficient cars, then the producers will supply them. I mean, it's not up to the government to be telling me, what kind of mileage my car needs to get. It's up to me to decide.
Wayne, was that you chiming in? Go ahead.
Well, so I think some of this has to be prodded by the government. The reason for that, Peter, is you've got major automobile, but if you had 20 automobile builders out there who could thrive in the marketplace, you'd have competition, and you're right, the free market would dictate that. But you don't have that.
Well,
you've got three major automobile dealers, and then you've got some foreign automobile dealers. And by the way, they do have to compete, and they will compete in this market for this kind of new,
when you say
low energy using automobile.
Look, Congress legislates. I mean, if you're saying the government has no constitutional authority, that's what Congress does.
But they have to
why don't we say that Congress has no constitutional authority to apply tariffs, to apply other means of, legislation, other sorts of legislation?
Mike,
you can't. That's a crazy statement. I don't know what you're trying to say.
Just because they have the authority to do one thing doesn't mean they have the authority to do everything. The Constitution limits the ability of the government to legislate. They can't just legislate on whatever they want. No, unfortunately, today the government ignores the Constitution and they do whatever they want.
But wait a minute, Peter, let's just be specific. What are they doing that ignores the Constitution?
Right.
Well, there's nothing in the Constitution that gives the federal government the authority to pass these types of legislation. They can't legislate fuel standards. I mean,
hold on a second. You started by saying they're unconstitutional, and then you said there's nothing in the Constitution that allows them to do this. Those are two different things.
No, that's how the Constitution works. It grants powers to the federal government.
But there's nothing in the Constitution about cafe standards because we didn't have cars in the 1790s.
It doesn't matter if we didn't have cars. They couldn't pass those kind of legislations for horse and buggies. They couldn't come back and have how many what your horse needs to be like.
Hold on, Jim Petticockis.
Listen, I left law school after a semester, so I'm not going to comment on the strict instructions version of the Constitution versus mileage standards. But Peter does make one good point, is that if this is an intrusion by government, and perhaps in the past this kind of bill wouldn't have gotten through. But one reason why this bill was signed was really because it's also viewed as a national security issue. Pre-9/11, these kind of standards wouldn't have gone. Post-9/11, where people worry about energy independence, that's one big reason why this bill was signed today.
It's okay to view it as an intrusion. That is a matter of opinion. But to say that Congress does not have a constitutional right to do this is absurd. The Congress created the FTC. The Congress created the Interstate Commerce Commission.
Too. That is
unconstitutional.
It is unconstitutional. And remember also, just a few years ago, Congress was giving out subsidies to people to buy SUVs.
Hold on, we've got the closing bell just 30 minutes away, so we do have to take a break, but take a look at the board.
Yeah. Phil. Well, produce prices rising. Yesterday we told you the wheat markets are really going through the roof.
If the cost of food just keeps going up and up, where will consumers cut to make up the difference? And when will we start seeing the cuts? Our Fox panel back now to discuss this. How bad does it have to get, Wayne, before people stop eating as much? I don't know how this works. You go more toward, I'd love to say you go to a protein-based meal, but it doesn't matter. Everything's expensive.
Yeah, well, some people say America's too fat already.
Maybe this will slim us down, right?
That's right. Some people say America's too fat, so maybe we should be slimming down. No, prices are going to increase. We go through this from time to time when we have bad weather. both in the Midwest and the South, wherever, and in California, particularly Southern California, where vegetables are grown, you're going to have this from time to time. In Jersey, wherever it may happen, and you're going to have fluctuations in the market, and people will use alternative foods instead of eating this, they'll eat that, and it's a seasonal thing, so it's going to pass.
Well, Peter, I got to give credit where it's due. You've been warning about this for a long time. The pressure was on commodities, and eventually it's going to change the way we look at life, really.
Sure. I mean, as I pointed out yesterday, true legitimate economic growth causes food prices to fall because farms become more productive and they produce more. But when you have a lot of inflation like we do now, that causes food prices to rise globally, and we're going to see food prices going up dramatically over the next few years.
Where do people cut?
Yeah, here's what people are going to do. Number one, they're going to trade down the food chain. People are going to eat less expensive food. They're going to eat less, meats and less seafood and shellfish and more, potatoes and rice and things like that. And then, of course, they're going to cut back on their discretionary spending as they have to use more of their budget to eat. And of course more of their budget for fuel and all the things that the government excludes from the CPI. That's what Americans are going to be spending their money on. They're not going to have much left over for other things.
Where do we see the cuts first?
Well, hey, look, the good news, Liz, is that real earnings, real income, growth in wages is surpassing the inflation rate, rising faster than the inflation rate. So thankfully, we're making more than the rise in prices.
We're not.
Yes, we are. Sorry, we are. But I don't want to get into that now.
Yeah, let's keep focused.
We are. Look, the other thing is that, and Wayne alluded to this, you have a huge drought going on. That's part of what's causing wheat prices to go up to all-time record highs. Granted, there is new demand. You got China, India, those places. People are going to cut where they can cut. We are seeing now, for example, Liz, this is the first time in the history of the United States where gasoline consumption year over year is flat. It has not grown. So they're cutting back there. Okay, that's going to be one place. The drought's not going to last forever, and that'll help. Orange juice prices, look, I pay less now for a half gallon of orange juice than I did last year. So they're coming down.
Where are you shopping?
I'll tell you later.
But Jim, the thing is that people are still, at least for now, let's hope it continues through the holiday season, they're still buying, $100 sneakers. They're still buying these $1,000 flat screens. So if they're buying this stuff, you got to assume that they're still buying bread, right?
Listen, I think people will cut from a 50-inch plasma to a 42-inch plasma before they start missing meals. I'm pretty sure that's what's going to be the case. I mean, I don't know, big shooters like Peter and Mike, they may go to the high-end supermarket. I spend a lot of time at Walmart, Costco. I think a lot of other people are spending more time at those kinds of stores than supermarkets. And, there is a good element to this. Higher food prices mean larger farm incomes, and maybe we can cut some of these huge agricultural subsidies.
Buy Costco stock then, because I think Jim's onto something. Seriously, when people start to get squeezed, they're going to go to stores like that. You saw Costco's numbers look very good lately.
And just for the record, I don't shop at fancy high-end supermarkets, okay?
Also,
I've never been to one of those.
Next year, they're going to have to bring cash because their credit card
from my
won't work.
good friend David Aspen over here. Omaha Steaks, everybody. What was the question? No.
Once again, Mikey takes us off topic. Wayne, you get to finish this one out.
Well, I think that Mike makes a good point, though, about that.
Wayne, I love you.
Listen, Wayne's going, I know where Wayne's going. He's going to Gelson's and Mrs. Gooch's right there, Century City and Beverly Hills, Wayne, and good for you.
Ooh, Gelson's and Mrs. Gooch's. It just sounds good.
The best. All right.
Well,
Thanks,
less than a...
Okay, for the moment, the bulls are clinging to the upside here with the market up about 6.5 points, just 11 minutes to go before the closing bell.
Yeah, well, there it goes. Negative, but you can't say -1 is a bad day for the market. It is a flat day for the market. The NASDAQ is about the same, and the S&P is also trading a very, very thin line just above the flat line there, and volume, as we've said, is pretty low. Again, the questions are, who's trading right now, and the answer is not many folks.
So I'm going to refuse to ask the Santa Claus rally question because we're not even close to it, but the question then should be formulated as such. Will we see a Santa Claus rally between now and the 24th? We begin with Sandra Smith at the NYSE. Sandra.
Liz, after all the news that this market was dealt today, can you believe it? We're going to finish the day pretty much sharply unchanged, as I love to say. But this market was dealt bad financial news, bad housing news. But at the end of the day, we hit the lows of the day, I should say, when we heard from Fed's chair, Jeffrey Lacker, and he said that economic growth will be weak into 08. Just to give you an example of what these traders on the floor are actually biting on. They are still concerned over the state of the U.S. economy. That is their primary concern here today. And there's no quick fix for that. As we heard from Teddy Weisberg earlier, he said housing is still the root of a lot of the evil in this market. And right now, for the foreseeable future, we don't know when that housing market may turn around. So right now we are going to be looking to finish about unchanged on the day. No real catalyst between now and then. Liz, David, I don't think a Santa Claus rally is anywhere in this future. Back to you.
All right. Thanks very much, Sandra. Sandra, stay with us as we bring in our panel. Let's start with Mike. Mike, is it going to be flat until the end of the year?
It's thin. You know, I spent 10 years as a floor trader. We'd probably be drinking something down there right now, so not a lot going on. It could, although I think, look, it's too early to say the Santa Claus rally is out. You could get that we got 2 weeks left to go. But I think 2008, once we got a clean slate, nobody likes to do anything new at this time of year. You're not going to get new positions put on the books right now, particularly in the environment that we're in. You start 2008, everyone's going to they're going to come back, they're going to take another look at the environment. There are bargains out there. Let's understand there are bargains out there. I think you're going to see a lot of money. There's a record amount of money in money market mutual funds now, over $3 trillion. It represents enormous buying power on the sidelines.
Jim, when do we see this rally, and will it come after the holidays, like Mike Norman is suggesting?
I think you're absolutely right. I think the Santa Claus rally is going to slide into 2008 and maybe become a Super Bowl rally, a Valentine's Day rally. I think by then, I think it's going to be much clearer that this economy is not going into a recession, that we're actually going to have an acceleration of growth sometime in 2008. And I think when we're sitting here a year from now, we're going to be saying, wow, what a great year in stocks.
All right, and I know Peter agrees, so that's the end of discussion, right, Peter?
That's right.
Well, I doubt there'll be a Santa Claus rally. If there is one, I would certainly sell into it. More likely to have a Valentine's Day massacre than a rally in the new year. Look, the bombshell du jour, you had S&P come out today and downgrade a muni bond insurer to junk status. You know, there are more of these downgrades to come. This is very bad news for the markets. It's going to drive up interest rates throughout the economy. This is just the beginning of these downgrades. There is a lot of bad news coming. Yes, we're going to be in a recession. I think we're in one now, and it's only because the government statistics are not honest.
Peter,
but by next year, we'll all see the recession.
Peter, weren't you blaming guys like S&P for not seeing the implosion of the the CDOs and the housing market?
Yes.
Now you're saying they're the oracles and we have to go with their downgrades?
No.
Look, S&P downgraded Japan to the level of a West African nation in 2002. The Nikkei was at 7,400. It was a wonderful time to buy. What?
Yeah.
Come on,
well, look,
you can't have it both ways.
No. I'm not applauding these guys. They're finally starting to fess up to these problems. I'm saying there's more to come. There's a lot more downgrades to come. And yeah, I poked fun at them. They shouldn't have downgraded Japan. They should downgrade the United States. Our sovereign debt is junk, not Japan's.
And it didn't change anything, that downgrade on Japan. There's still a second largest economy in the world.
Because people probably laughed it off.
Well, wait, let me bring Jim back in here. The sovereign funds that are saving some of our biggest names, China saving Morgan Stanley for the moment, and we've seen what Abu Dhabi did. Do you think that this is the way of the future, at least the near future?
Well, I think other countries, foreign players investing in America, yeah, I think that's the wave of the future. I think it's a wave to be welcomed. They see value in America.
They do. They see us on sale.
Even if only Peter Schiff loved America as much as the Chinese sovereign wealth funds.
But we don't want to celebrate the buying up of our country. They're not investing in America. They're buying up our assets.
Peter, it's the way the market works right
yes,
now.
That's what happens when people are poor and they've borrowed a lot of money and they can't pay it back. Their creditors come back and collect their assets.
This is an equity investment.
Collecting our assets.
They're taking a 5% position in a company. We have mutual funds that hold bigger positions here. 10%. 5% the Abu Dhabi investment into Citigroup. You are exaggerating this thing. You're making it sound like they're picking up these companies and carting them off to China somewhere.
Just wait,
Mike. It's not happening.
Like treasure.
Mike, it's just starting. Just wait.
Are you sure you want to take that position, Mike? Because it sure looks like a trend now.
Take what position?
That this is not going to be a
I
long-term
welcome.
thing.
Listen, why shouldn't we welcome foreign investment coming into
I'm
this
fine
country?
with that.
It's a wonderful thing.
But
And,
Peter's saying it's just the beginning, and
that's
there are
fine.
indications it is just the
Liz,
beginning.
It's a terrible irony that we Americans that created the greatest society on the face of this earth, we are so negative and pessimistic about ourselves, and other people from Arabia and China and all these crazy places are saying America's on sale is such a wonderful bargain and we want to put our money there.
Mike, our fathers, our grandparents created a great society. They created a lot of wealth, and we squandered it. We blew it on consumption. We ran up trillions of dollars of debt.
Hey, hold on a second. Jim Pethokoukis, we got to remember it was this generation, or maybe generation, I don't know what you put it, but it wasn't our father's generation that created the computer revolution, which has increased productivity around the world by a factor of 10,000.
That's right. It's this generation which has created this knowledge economy, which has helped create this globalized world, which is bringing billions of people out of poverty and creating a wealthier planet and a more prosperous planet and a safer planet.
So, Peter, you can't dispute that. This generation has at least created the information age.
Well, first of all, don't forget about the Industrial Revolution. You know, a lot was accomplished back then.
Okay, we won't.
Sure, look, I'm not saying there hasn't been any technological innovation. That's what happens. But unfortunately, we as Americans have simply spent much more than that productivity. We have gone into debt by trillions of dollars. We've lived beyond our means. We owe the world a fortune.
All right.
We can't pay it back, so they're collecting our assets.
Gang, we are going to leave it at that so that we can hit the closing bell, which is coming just a couple of minutes from now as the Dow is finding a resting spot.